Good morning. Welcome to Beyond the SEAF Mile. I'm Jack Kosar. This is effective for February 18th, 2025. Let's get started. SEAF signals for this week. We have communication services, technology, and utilities. Technology and utilities coming in the replacement of both financials and industrials from last week. Technology does it on a strong trading week and a strategic quarter. Utilities does it with strength from its tactical week or trading week and tactical month, edging out financials due to the trading week. Just as a quick note, quick reminder, with the SEAF model, if you see a tied score in the ranking, overall ranking, it then defaults to the trading week. We want to go where the new money is going, and in this case, utilities ranked higher than financials. Financials showing 11 on the board. Again, if you looking at the price chart, coming up on new highs for financials, it'll be interesting to see if this is a little bit of profit taking for financials and we resume trend with tactical month and strategic quarter, or if this is going to open up a new trend for financials. We'll be checking in on that next week. Healthcare sitting low at the bottom, and energy showing a little bit of life, but still very much a bottom dweller for this week. Heading into our heat map, a couple of key notes for flows. Flows remained relatively light. I think we had a total 1% overall increase last week, and it's now been 2 weeks since we've had a one-day move of 1% or more in either direction. Which kind of highlights a little bit of apprehension in the market. And I'm going to bring up a price chart here of SPY right now. What we're seeing here is, and this is the last couple of weeks, this testing of new highs. So we're just a little bit over on the new high. This was of December, about mid-December. And we're negotiating those new highs. And there's a little bit of apprehension here. So what does that mean to me is this level, this 610 level is extremely important. We aren't accelerating through it. We aren't driving, the flows are really apprehensive here. So right now, this is where, decision points are made. Are we going to continue a new leg higher here, or are we going to reject this December high and head down? On a positive note, looking at XLK, the market will need a leader to take that next new leg higher. And I moved over here to XLK. As you can see here, we've been negotiating the highs going back the last couple of weeks, but really, kind of flirting with this one, this high from mid-July of last year, and really been kind of stuck in this sideways pattern for a few months now. If we can really negotiate, and as we see a lot of flows coming in to technology right now, if we can get some real sustained flows in tech, this is what could drive the market higher and allow us to be a little bit less apprehensive at this level. So just key to note is it's interesting to see as technology, communication services, and then utilities, which is more or less infrastructure and AI proxy, all being at the top. This could take us to that new leg higher. Overall with flows, starting to see that mix here where we're seeing the really green at the top, red at the bottom, which shows a little bit more conviction. Overall, obviously with financials, as I mentioned earlier, not knowing if this is just a little bit of a blip profit taking at the top or if we're seeing a new trend change. Next week will really be a highlight to see how these flows continue. The outflow on financials was negative 0.31%, so not quite that 0.4 showing real strength. We'd like to see 0.4 either plus or minus as a flow on a strong flow on the trading week, so just short of that. Technology coming in strong at 0.45%. But other than that, everything else hovering really close to zero, I guess with the exception of healthcare. But these colors are real light for a reason. That means we're not seeing a lot of movement on the flows. And as I mentioned earlier, we're about 2 weeks from our last one-day percentage increase in all of the 11 sector spiders. I think that, again, really going to be looking for technology here to help us take that next leg higher if that's in case what's going to happen. Rolling in through our rainbow charts, communication services continues to light the world on fire here. Have this really nice, strong upward trend in relative outperformance. We are upper favored for communication services as well. Overall score of 6, meaning 2s across the board for communication services. And we're continuing to see this nice outperformance here. We had that brief little touch into neutral, but otherwise it's been gas on for communication services and really seeing some nice relative outperformance. Technology. As technology has climbed up from deep avoid up into favored, we are seeing some nice relative outperformance. Please note that this is still in that relative performance box that we've been talking about going back to August of last year. Really need to see some sustained flows to break out of that. It is nice and encouraging seeing that 0.45% in the trading week, but we'll need to see follow-up flows on technology in order to sustain this trend, but seeing some nice relative outperformance as technology is a SEAF signal for this week. Looking at healthcare, I like to highlight the bottoms and the tops. As you can see here, we've kind of attempted multiple times to come up and touch into this favored. We did get a little bit of relative outperformance spikes in here, but down and back into the avoid, really continuing this overall downward trend that we've had a relative performance going back to late August, early September of last year. Just wanted to highlight consumer staples. So consumer staples was 5th overall on the rankings, but I think it scored a 14. No, sorry, consumer staples 16. So it's still in the neutral area, but just seeing a little bit of life. Now we did see a little bit of life previous to just about a week or two ago for consumer staples, and nothing really happened. We've had a couple of touches up into favored, but seeing a little bit of nice relative outperformance trend emerging after a real steep decline going back to that early late August, early September mark. The reason I like to pick this up is I like to see kind of that negative skew or the positive skewing of money flows. So not quite the normal traditional one that I see, but going from this 8 to 3, having a 5 overall, just seeing a little bit of positive, and it seems to be kind of building on this relative outperformance that we were seeing about a month ago. So nothing to do here. This is not a SEAF signal, but just something that potentially could be emerging here. The last time, the way we look at consumer staples, it does spend a lot of time in this kind of neutral area, and then it'll peak itself up. So during those peaks, we could see some nice little bouts of relative outperformance. That could be something that we're starting to see here. Similar patterns up in the upper part of the chart relating to relative performance down low. So, for our managers maybe looking to take a little bit of lead off or are interested already in the consumer staples space, this is a place to maybe just keeping an eye on. Again, not a SEAF signal yet. Would need to get us stronger flows to get us up into that upper favored, but just a place to watch. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.